Hello, and welcome back to Coin Lady channel. As with the great bulk of crypto and money, we will be discussing Ripple and XRP today. September is in full swing, of course. September is generally a bad month, and we've taken a big hit in the last day. Naturally, everyone is freaking out and becoming frightened, even though I fail to understand the relevance of either. We have maintained our year-to-date XRP lead. Bitcoin is up over 53% even after a 40% drop. The year-to-date percentage gains for the vast majority of coins are still rather high. We've discussed this possibility, and I've even mentioned that XRP might once again trade for less than 40 cents, so when we take a broad view of the market right now, I'm not too worried. If we get to see that, then you can bet we're going to have to get a lot of people into this boat. However, as I take a more in-depth look at the market today, I am aware of how early we are in the next major cycle, which may or may not be a utility cycle. Institutional level use is experiencing rapid growth. When we consider the institutional sector, we find that many of those involved have been discussing tokens inside the area at great length. They are interested in making use of the area and its associated infrastructure. Meanwhile, the retail sector is fleeing the sinking ship because, hey, the prices are down, I better get out of here before I lose everything. That's where most people's attention lies. And I think it all goes back to the dot-com bubble, right? You wipe away retail, and then all of a sudden there's widespread adoption. That's also when everything of significance occurs, of course. Do we now possibly envisage that being eradicated? Certainly not. In my opinion, rules and regulations play a larger role in this regard. I anticipate far larger advances to the upside after this major correction. We have no idea how low this can go. I've mentioned before that XRP's price could drop below 40 cents. Black swan. Events are so rare that no one can predict what will happen. We need to be cautious and wait for a trend to begin once more before jumping on the bandwagon. But, on average, even on the days when we're down, it's not that horrible. Before I buy any more XRP, I want to see that significant support zones are being attacked. But with that in mind, there are a few things we need to discuss. Yes, I did see Kevin Cage tweet from over here. Now, he did upload a video to YouTube talking about it. There is a lot of helpful material in there, and I think everyone should read it. However, we anticipate that future acquisitions, ripples, will have a significant impact on the tokenized assets market as a whole, which is projected to grow to $16 trillion by 2030 PCG and which we, too, have been studying. Almost every company in the world supports tokenization. Now even the BIS is discussing tokenized assets. According to a report cited by the World Bank, the IMF, and many others, the institutional crypto custody market will grow to a whopping $10 trillion by 2030. To prepare for this boom, the company Medico has acquired a custody and tokenization firm called BBVA for DeFi and crypto services, Union Bank for crypto trading and custody, BP Bank for custody and tokenization, and DZ Bank for digital asset custodial services. The fact that 87% of the $6 trillion plus in daily FX activity is speculation and only 13% is actual central banks blew my mind when I first saw it, and by the way, Anderson is a terrific person from the space as well. Keep in mind that the foreign exchange market is only a small fraction of the daily $6 trillion market. In April of 2022, this market will be worth $7.5 trillion daily. According to the BIS, 3 years ago, the daily rate was $6 trillion. However, things are a little bit different today. Remember too that the 15th of November, 2022 news tells us that Ripple was covering. In addition to covering approximately 40 payment markets with on-demand liquidity, they also implemented machine learning capabilities. Also, remember that the report we got showing that 90% of the FX market is represented through on-demand liquidity's development into approximately 40 payment markets was a remarkable insight into how massive Ripple has become. It's a major deal, obviously. Because, once more, that accounts for 90% of the foreign exchange market. Without the speculative activity that underpins today's over 70+ payout markets, we can see that currencies would be less liquid and, hence, less value. To the tune of 90% plus of the total FX market. Now that we're linked up, all that's needed is an increase of liquidity, railways, and volume on demand. All markets benefit from speculation activity, and the more the volume and liquidity of a market, the greater the potential for asset prices to soar. Again, this FX market's volume and value may be enormous if we take a close enough look. We still need the rails to be in place and the traffic to make this work. Everything is linked by on-demand liquidity. But I believe that will occur eventually. And that, to me, is the greatest thrill of all. Many people are thinking about derivatives, others are thinking about international payments, and still others are thinking about a variety of other things. The fact that we already have access to 90% of the foreign exchange market is one of the main reasons why I find it so fascinating. Given the sheer volume of daily transactions, this is a massive market with the potential to significantly impact the XRP price. To transfer that sum of money, I believe a sizable quantity of XRP will be required. Again, this is just my own speculation based on the current state of XRP supply and demand. Wrath of Kahneman shows us, however, that many people are now again discussing the concept of fortress trust, which I touched on in a video I posted late last night. However, Wrath Kahneman did make some really valid arguments. We also understand why Ripple invested in Fortress Trust and how it is dissimilar to Medico. My guess is that consumer focus is more important than instantaneous liquidity. As a disclaimer, I should mention that I am not currently employed in this field. A lot might be incorrect, then. Please share your knowledge in the comments below, and remember to take a lot of this with a grain of salt. Because there is a lot of guesswork involved when we take a broad view of the crypto industry. We continue to place large bets on the eventual adoption and widespread use of cryptocurrency within the international monetary system, a prediction for which I believe there is considerable evidence in the form of existing institutions. But here we are again, engaging in conjecture. We are also operating in what I would call one of the earliest markets currently available. In my perspective, this is one of the greatest possibilities we will ever have. Yes, I believe that cryptocurrency will play a significant role in the future of money as we know it as the world around us continues to change. Even more obviously, Medico doesn't act as his own custodian of digital assets. Instead, they provide platforms where authorized third parties can store digital content. Fortress Trust is an approved custodian, which means they have the authority to retain and manage assets on behalf of others. A good example is the Integrated Fortress Capital IRA program, which enables the storage of crypto assets. There is a great deal of oversight, separation, and reconciliation of assets. Each account's assets are held by the fortress. See the crypto liquidity tile for a description of the company's cryptocurrency to fiat currency exchange services. This is genuine liquidity, as opposed to merely high volume. They link it up to a hub of sorts. And, if I recall correctly, the focus is on liquidity. The most crucial part is liquidity. Remember that the liquidity hub exists in the Ripple network. A lot of people have said things along the lines of, well, they're not going to include XRP, and why isn't XRP labeled here? It was because of regulatory uncertainty around XRP, because when you go to Ripple's website and click on Crypto Liquidity and then scroll down within the Liquidity Hub, XRP isn't included. Since XRP has been cleared, it can be used with relative ease in the liquidity pool. This is a very important reminder. The fifth element can be found here as well. Contrast that with the following description, or Trust is well known for its creative methods of merging conventional financial services with blockchain technology. Among its cutting-edge solutions are crypto and fiat payment rails and on-off ramps. In my opinion, Fortress can play a crucial role in bridging the remaining fiat gap with Ripple. Exchanges further forgers white labels, their products, and integrating them in other apps, which users don't have to engage with, are unnecessary. White labeling, by the way, is a major consideration. This is something I've discussed with a few folks. Having a single, white-labeled on-demand liquidity option would be a huge step forward, expanding upon the foundation laid by Ripple. However, Brad's observation is also worth noting. They've established an impressive enterprise, complete with repeat clients and a healthy mix of crypto veterans and newcomers. Because widespread adoption of cryptocurrencies has not yet been achieved, this finding indicates that more attention be paid to building a bridge between cryptocurrencies and fiat currency used by consumers. For that reason, these bridges are essential. Also, Long's comment about acquiring Fortress Trust so as to serve as a one-stop shop for businesses desiring to convert, store, and move wealth on the blockchain globally appears novel and potentially significant. Again, yeah, I mean, it is a big boat to really kind of know. We're just also publicizing NFT tokenization ability. Our contracts, securities, health records, videos, real estate, documents, and IP are all secure and privately held. No IPFS is available for use in conventional financial settings. Ripple has spoken similarly of the XRP ledger. Also, carbon credit tokenization, carbon offsets versus cap and trade EFTPS, and possibly even real estate, could benefit from this NFT minting and custody capability. However, I don't see this happening right away. Sorry, but they don't have any new Nevada licenses available for the Ripple system. Additionally, they are unable to combine their assets, which may create complications for larger liquidity pools. What about a pool for Ripple? Why? That's a question we can't answer. I could see how that might be helpful. I didn't have the business acumen or foresight to see a way out of the situation where XRP was proclaimed a security trust for Ripple on-demand liquidity transactions. Despite my skepticism, there was no mention of the case they'll be handling in the news that was vetted for on-demand liquidity. So, my argument is that Fortress paves the way for more conventional forms of finance like Ripple over the long term, while the monotony of Web3 suggests boring consumer uses something more hands-on with NFTs done on-demand liquidity speculation. I think this is wonderful for Ripple and on-demand liquidity, and maybe even XRP if we take a closer look at it. When it comes to the future of certain collaborations, I have my doubts because of the lack of clarity around many of them. I still think that Ripple is attempting to become the infrastructure for nearly everything, especially when we consider recent developments in crypto custody and related areas. We got this major update on July 19th, so it makes sense that the Nasdaq would promote itself as a one-stop shop for both businesses and consumers. And by the way, this is Fortress.io, so you know it works. Nasdaq shelves? Cryptocurrency storage strategies? There are also some bullet points below. Let me narrow it down for you. So there are certain bullet points to look at. Is it because crypto has lost its luster in the eyes of institutional investors? On the contrary, institutional interest in Bitcoin and other cryptocurrencies remains high. Is it possible that the company's inability to develop and roll out new services is the result of internal bureaucracy and corporate inertia? Yes, perhaps a little of that. Is it because they were unable to become a qualified custodian because New York refused to provide them a state trust charter, even though states and the OCC have essentially stopped issuing new trust charters, especially for crypto-related businesses? I think Nasdaq would have been given special treatment. That's probably not the situation. These are my ideas, and I should mention that they come from the CEO of Fortress. Based on the court's ruling on Ripple XRP, I believe this is linked. The judgment notes that while XRP's initial distribution was a security, the token's secondary market trading is not. To put it another way, the regulatory worries are a judgment that is not aligned with the business of the exchange, and as a result, they are leading Nasdaq to recoil. The market hasn't changed much, and only a select few trust firms are currently engaged in crypto-related operations and offering API technologies to their clientele. These include, and here you have the names or just trust being number 2 on the list, these firms will all become more valuable, and if when they are acquired by crypto exchanges, NFT marketplaces, banks, and other entities who need to own a qualified custodian, and if those acquires offboard customers, as happened when PayPal bought Curved, leaving Fireblocks as the primary MPC wallet solution, then it will get very interesting as whoever is the last indefatigable holder in light of the SEC's ruling that cryptocurrency is not a security. Nasdaq's decision to shelve its cryptocurrency custody plans has had no discernible impact on the industry. On the other hand, this is beneficial for the licensed businesses that are already chartered and set up to serve the sector. I believe this is also true of Fortress Trust, as shown by the ripple effect. And I imagine they were thinking, hey, let's go ahead and buy them. And I believe that many of the acquisitions we have seen from Ripple has helped their IPO. I think an initial public offering, IPO, for Ripple will happen shortly. Many have wondered whether or not Ripple would go public and if they will list XRP as an asset. And they anticipate that this will cause XRP's value to soar. I just can't seem to accept the possibility that I'm the one who's wrong here. However, I simply do not buy into the idea that XRP's value is dependent on Ripple's IPO. But maybe I'm incorrect again. Nonetheless, when we take a closer look at that, simply put, I don't think XRP's price will change very soon. Although I didn't anticipate a large price swing for XRP once the matter was resolved, I did predict that the cryptocurrency's value would likely increase once the legal wrangling was finally over. However, I did note that it was possible that the event may amount to nothing, in which case the price would not change. A change in price did occur. Year to date, I estimate a gain of well over 100%. It wasn't anything exceptional, though. And I see the same thing happening with this Ripple IPO. Too many people in the community are saying that it will create value for XRP and that it will shoot XRP over $1 and that it will go to $5. I don't necessarily see that. I think a lot of that is just for clickbait, but I could be wrong. Nonetheless, if you enjoyed this video, please like, subscribe, and enable notifications so that you never miss a new one. See you in the next video. Bye.